You know, the Nigerian stock market is a place where dividends are.
Dividend is king.
Dividend is king.
So if you're unable to pay dividends over a couple of years, it will have an impact on attracting buyers of those shares of the affected banks. So that's an issue. And then, to be honest, it's less the issue and more if shares of these affected banks are tanking in the market. How would they be able to do the rights offerings, the public offerings? That's where the challenge is. And if you look at what the CBN has allowed as permissible capital in the mix of this recapitalization program, you realize that there's an issue there in terms of if you're unable to raise equity capital.
The CBN's mandate isn't to keep banks alive. The CBN's mandate is to ensure that the banking industry is healthy.
Fair enough.
That's different from what you just said. To keep banks alive and to
he's saying it is not.
It is not okay.
It's not its job to keep banks alive.
100%. No, it's not.
But it's not whose job. It's
the CBN's job.
That's completely wrong.
No, it's not.
It's financial stability.
Financial stability. Yeah, financial stability is
not keep banks alive.
Okay, banks can fail. Yeah.
We've seen proof over the years that the Nigerian government, if not any other government, at least Nigerian government has had, has not really been good at running businesses. Now, you can engage in debates about whether or not governments should be running businesses, and there's a capitalist idea that they shouldn't, right? But there are also places you may go to and you see some governments sort of do a decent job running business.
How do we get there today? Especially with some of we've seen again. PIA is there, hasn't really unlocked the so-called $20 billion investments that we're expecting. I know Shell has already announced, their own FID. They're stuck around trying to get the, Ogoni people to allow us start to produce. But whether we like it or not, that sector needs capital. And so what sort of deals do you think we should be doing as a country beyond just perhaps maybe selling to the IOC's divesting? How do we get the big boys in?
For the average Nigerian who generally believes that because he's a Nigerian, he should have access to certain things. And then when political season comes, his entitlement wants to be able to grab what he thinks he's entitled to, instead of being able to listen to the person who has a structural plan to be able to get us where we are, from where we are to where we should be, is the problem. So the best politician for Nigeria today is the person who knows the truth, fully understands the truth, but still can give you the poetry you want, and then somehow mix both of them into a.
But I think it's also an image thing,
and
right?
give it to you.
For some reason, I've noticed that this Giants of Africa thing. We tend to think that we are bigger than we are, richer than we are.
Aren't we giants?
Giants,
giants with
GDP
in what?
Or in inflation?
In what?
I'm sure that we giants in our currency value.
In what?
We're not, and we're not.
Okay.
So that one.
The Afrobeat.
I will not.
The way we would fund deals for today can't be the same way we fund deals years ago. Otherwise, we will face the same kind of problems that the banking sector is facing now with forbearance and all that 10 years from now or 5 years from now. So how isn't there a better way to structure capital that you don't need banks to lend you $1 billion and wait 10 years to get that back? So in the US, at least from what I know, and most developed economies, when they fund you, they can basically repackage that debt, whether into asset-backed securities, securitize that debt, and then sell it to pension funds or asset managers, people who want long-term returns. Why is it so difficult to package deals like that here? Because I haven't seen anything like that yet, at least at that scale. Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Igodre, and of course we do this every week on Fridays. We go live Fridays, 6 p.m. On the dot. So if you are just watching this for the first time, come on, where are you on that? I mean, so we do this every Friday, of course. So if you're not following our metrics, of course, follow us on our YouTube channel and of course turn on your notification as well. What a week it's been, and I have the usual gang with me, and for some reason Tunji is back to steal my shine. Yeah. Those of you who missed him, I'm not really sure what you guys missed.
The nation's uncle.
Well, he's here to just steal my shine, and I don't know
Nation's
why.
uncle.
Why? And he's gone. He went to Russia and came back with nothing, you know?
Yeah, he cited
And he's just gone 1 week, and Trump has just gone ballistic.
Whatever.
Anyway, of course, I have the fake Otumba here as well. The one and only fake Otumba, Arnold Dublin Green. And in the house today is I don't know whether this guy is the Otumba lawyer. A super lawyer in the house today. It's not all the time you get lawyers coming into a show like this.
Scare me,
So please shout out to Mr. Chike Obianwu. Yeah, so for those who don't know you, sir, that's a little bit of introduction. Who are you, sir?
Oh, come on.
Everybody, yeah.
Before he introduces himself, I want the honor of ensuring that it's not Ugodre that does this today, because he's not the oldest.
Oh, yeah. Awesome.
You see why I told you that I didn't miss him at all? He's not meant to be here. But it's okay.
This is my little brother.
Hey.
That's who I am.
That's who I am.
That's okay.
That's who I am.
We'll accept that. We'll accept that.
Yeah. You know one thing about lawyers, right? I always say that they make contracts so complicated. So they write the contracts and they charge you to translate the contract for you. one of the best professions in the world. I wish I was a lawyer.
I think there was a tweet I saw recently. No, it wasn't lawyers there. This one was a sub at McKinsey. But anyway, Chike Obianwu is a partner at one of the largest law firms in Africa, I think, Templars. And welcome, sir. Good to see you.
Thanks for having me.
Yeah. So, funny story. There was one time I was in one of the very first times I went to South Africa years ago, and so I was walking around that Sandton area, and so I was like, wow. So I was asking, my friend, the South African, like, man, where did you guys get the money for? How did this guys? I said, wow. You know what's funny, my friend? I said, what's that? One of the richest people in this world who invest in all these things are lawyers. Like lawyers. It's like lawyers. These guys
It's not too late
make
to go
all
back.
the money.
Santon.
Yes. And I'm like, lawyers do make some money, man.
Yeah,
Oh, come
that's
on.
what I'm saying. That's what I'm saying. They charge you to translate what they wrote in the first place.
So I mean, there's a lot to go into today, but Chike, I just always thought lawyers are one of the best investors out there, right? I don't know why, because is there any method to how lawyers invest? Is there anything that makes you guys very, careful with your investing or choosy with your investment, styles? Like, because I do know that a whole lot of startups companies are lawyers back. So how do you guys cherry pick?
I mean, to be honest, I don't necessarily agree that lawyers are particularly good investors. What I would say is, in my experience, and I mean, there's evidence to back this around the world, lawyers have been known to be some of the best investment bankers in terms of career transition. If you look at people like Bayogun Lesi, Aiboje, Aigi Mokwede, many of those people started their careers as lawyers and somehow transitioned into financial services, advisory, investment banking. So there's something about the training of lawyers that prepares you for a diverse range of industrial endeavors. It's the discipline of thinking a certain way, going back to first principles, and also just being commercial generally. So the best of lawyers will be people who have commerciality. And all of those things translate when you go into the business world.
Interesting. I mean, it was... One guy said, look, man, if you have a lawyer friend, just buy whatever he's buying, man. They seem to always know what's going to happen.
Yeah, well,
they seem to know how to follow the money.
But it's not ethical for you to be a part of a deal you're brokering, right? Because I mean, if you're brokering or at least a deal for like say maybe think back to when MTN was coming to Nigeria, you know.
You have a particular lawyer in mind in saying this?
No, I'm just saying it's just this kind of things we hear things.
No, for me, it's probably the attention to detail, right? When I started off, I was an intern in a hedge fund. My boss at the time said to me, "The office is your library." So you have all these analysts and hedge fund managers in this big room, and in the back of the room are just books, and they would read. When a company or a country is about to issue a bond, the articles and articles that they would publish, and I got into that habit of just being a reader, and I've always known lawyers to be just avid, they just have this ability to pay attention to the smallest minute detail, and I think that comes in handy as an investor, just being able to look at things and being able to actually see things and think through things. And I think lawyers have that.
Absolutely, and I'll come back to that point, but to Tunji's point about the ethics of investing in what you're advising on, I think the important point is that lawyers are not allowed to make secret profits. So what does that mean? So you couldn't be in a transaction and make profits that you're not declaring to your clients.
Oh, okay.
So in the example that you give, right, it's not unethical for you to be involved in the equity play if you're advising, provided that you've disclosed to your clients. So you see situations where, because lawyers are early participants in transactions, you see situations where lawyers who have the means get invited to equity play just by virtue of being there when the deal is being discussed. But typically we tend to keep these things separate. But occasionally you get invited.
But also you write the rule of the article, right? So you know whether you keep it separate or not. You know how to.
No.
So what I told you. You can't say follow the lawyer.
They know how to. They wrote the laws now, so it's like there's a law that they omitted. You know what I'm talking about. It's like there's something there that's not there that the rest of us don't understand.
Tunji's just jealous. Tunji has always been lawyer.
Ethical. But I agree with your point that the best of lawyers are trained to pay attention to the tiniest details.
Yes,
because
100%.
in our business, a few words gone wrong could make all the difference.
Yes, of course.
Sometimes interpretation of what does may mean, what does shall mean, could make all the difference in terms of profitability, lack of profitability, disaster, those sorts of things. So interpretation, attention to detail, foreseeing where there's trouble. So if a well-trained lawyer is looking at a potential transaction, we're looking at it with dispute in mind. We're looking at it with
what could go wrong.
Something's going to go wrong, and how do we solve for that thing that will go wrong? So those are the sorts of.
That's investing, right? Because when you're looking at an opportunity, you're trying to figure out it's like a polynomial tree or decision tree, right? So it's like, if this happens, then this will happen, and then I'll do this. If this happens, then this will happen. So it's
well, having said that, to bust your bubble, right? The downside of what lawyers do that wouldn't really do well in the business world is the fact that you see a lot of risks. And so some of the bad ones amongst us become too risk averse.
Yes.
Which is the reason why sometimes you hear that the legal department of businesses is where transactions go to die. So the lawyers who don't have commerciality will look at a transaction, identify all the risks, but not provide a solution. But the more robust, business savvy lawyers, and that's who you should go for, would look at those things and take a pragmatic view. And then also provide solutions, and also realize that you never really have a risk-free transaction. So they're lawyers and they're lawyers.
This is a Nigerian government bond.
So good that you said may and shall. What's the difference though?
I mean, again, it depends. But generally speaking,
no school 101.
So generally speaking, right, in the common law world, right, we take the view that shall is compulsory, and may,
shall,
so may is suggestive, right? And there's situations where even you contest between will and shall. You will do this and you shall do this. They don't necessarily mean the same.
So will looks like compelling you or coercing.
So
Will is also the owner.
Like by
between,
force.
between
Will is your
will and
decision.
shall,
Yeah.
right? Generally speaking, will is supposed to be harder,
Yeah.
right? But then to every legal rule, there's always an exception. And sometimes we have exceptions to exceptions. And as Arnold
Same
said,
problem.
I mean, that's why we're in business.
Yeah.
Because if everything was plain,
Yeah, you guys will be
We will need
business.
you. Yeah, so you have to pay them to translate. You pay them to translate what they wrote.
I wouldn't be able to buy
You know, literally, you pay a lawyer to translate what lawyers have written.
You know the thing that causes trouble for at least entrepreneurs like me
Mm.
is you try to get this deal in the door. You know, you've spoken, you've called your guy's guy who is now giving you the MD's number on the other side. You've done all the things. You've gone to go and wait for him in front of his club. You bought him the 21. Everything. You've done everything.
Yeah.
So it's not like, let's do this deal. It makes sense. Right? Just send the documents out.
I'll send it to legal.
Legal will now go clause 3, subsection. I'm like, come
Yeah, that's what he said
on.
now. So deals is
I'm
where
like, you guys now
The
just
legal team is
sign
legal to
this.
deals go to die.
I mean, I think there's got to be balance, right? It's about mind the gaps.
Mhm.
You know, in Shakespeare, someone said, let's kill all the lawyers, right?
Yeah.
But in truth, lawyers are very
Mm.
extremely important in business, extremely important in
Yeah.
everything.
Yeah.
Because law is one of the most pervasive things that you can think of. There's practically nothing in this room that there wasn't a law.
Yeah.
I mean, so there's a legal
To
standard
protect
to
us,
the air
regulates,
conditioning.
yes.
Yeah,
There's
of
a
course.
legal standard to
Yeah.
the quality of the air. There's a legal standard to
Yeah.
any and everything. And so there are lawyers behind those. There are laws behind those.
Yeah.
And if you get it wrong, town
Get
plan,
punished,
Yeah.
yeah.
permitted.
And even on the side of laws and lawyers and legalese and regulators, I'm a huge advocate for controls as an entrepreneur, as an investor, and anything. When controls are put in place, ambitious investors, ambitious entrepreneurs, that would otherwise, because we know our weaknesses, right? So because you really want this return or you really want this situation to work, you can cross lines, ethical lines, right? But if as an investor, as an entrepreneur, as a CEO, you put controls in place that are beyond you, you know that regardless of even if I want to do certain things legally, there are controls in place that will stop me from doing this. I'm a big advocate for controls and
Absolutely. I mean, and
big
it's, not,
advocate.
and it's not just law, it's also governance, right?
Yes.
And governance is a combination of law and standards that may not necessarily be law. It may be
Yeah.
prudence, it may be all sorts of other considerations. And
Anyway, I don't
so-
know if you guys saw that tweet.
I accept governance. I just don't like it. I accept it. I mean, I accept it as a necessary evil. It's just like having HR in your organization. You know?
but I think that's where the answer is. It's a necessary evil.
Yeah.
Yeah.
It's the necessary evil.
I mean, the controls that we have placed anywhere in the world are not necessarily pleasant things.
yeah.
But they serve a purpose.
They
right?
do.
Always.
They do.
Anyway, I would always choose lawyers over some consultants. I don't know if you guys saw on tweet on McKinsey. So it says in 2022, McKinsey was paid $55 million to advise Warner Brothers to combine with Discovery. And then from 2022 to 2025, McKinsey now also, I don't know if this is true, it's just a tweet. McKinsey charged Warner Brothers Discovery $37 million by advising the company to change from HBO to HBO Max, then to Max, then back to HBO Max. So at least, anyway. So
consultants and lawyers.
At least
yeah, talking about
McKinsey are not
regulations,
lawyers, are they?
regulations and governance. There was a circular that was published last Friday by the central bank and on forbearance for banks. I'm sure we've all seen that, and it's been in the news the whole of the week. And the circular, I don't know, maybe what really got a lot of people, worried was the fact that, they banned dividends for
And bonuses, yeah.
bonuses and expansion, outside Nigeria
Yeah.
for banks that were still under forbearance.
Yeah.
So, I don't know. Maybe let me start with Chike first, Joe. What's your thought around it? I mean, some have said, look, this is now a CBN that's fully, orthodox. So no more unorthodoxy. And so they are basically, this is all part of the grand scheme of ensuring that you have
Reforms.
sounder banks, all part of
Yeah.
the reforms and all part of this whole recapitalization thing. I mean, just, I guess maybe from your own experience, what do you think is going on?
I mean, I think the first thing for me is that regulatory forbearance is a fact of life, right? If a market is challenged, if something is going on, things like the pandemic, it could be some issue with macro, right? Regulators anywhere in the world have been known to grant forbearance
Of
from
course.
complying with strict regulatory requirements. And that's exactly what has happened here, right? So loans that should have been provisioned for, right? There was some relaxation in how banks could,
Provide for those loans.
provide for those loans, right? So in and of itself, it wasn't an issue, right? I guess the question is, how much longer are these things supposed to last?
Yeah.
The pandemic has come and gone. Maybe, I mean, some of the issues that gave rise to some of those non-performing loans, right? So I think kudos to the CBN for beginning to sort of take away some of those latitude, if you like. Now, I guess the question becomes, what impact will this have on the market? We've seen some reports talking about potentially affected banks. For me, the question is, ultimately, how does that impact on the ability of those banks to raise capital in the midst of recapitalization? The Nigerian
And in the
stock
midst
market,
of this forbearance as well.
exactly. The Nigerian stock market is a place where dividends are.
Dividend is king.
Dividend is king.
So
Like
if you're unable to pay dividends over a couple of years, it will have an impact on attracting buyers of those shares of the affected banks. So that's an issue. And then, to be honest, it's less the issue and more if shares of these affected banks are tanking in the market, how would they be able to do
Raise.
the rights offerings, the public offerings? That's where the challenge is. And if you look at what the CBN has allowed as permissible capital in the mix of this recapitalization program, you realize that there's an issue there in terms of if you're unable to raise equity capital, pure equity, then the CBN has to rethink maybe the duration within which the recapitalization has to take place, or some other consequence down the road.
I'm going to come
That's
to
actually quite
Arnold in a bit now, but I just wanted to touch on this. So two things. The first is, I think there's some conversation around perhaps should the CBN have released that circular, seeing that they had actually, a lot of these banks already knew, they had already spoken to these banks. That's one. I mean, you speak to that as well.
Yeah.
And then secondly, well,
Is that a suggestion that a silent whisper to the banks would have been the appropriate?
Or maybe
Yes.
banks
No,
that's
I don't think
communicated.
so, though.
So hold on now, let me you respond. Then secondly, there's also conversation around, okay, you're in the middle of a recapitalization, you're bringing this out, we're trying to raise money. Now you're essentially telling investors that some of those money that you're actually going to raise
It's going to go to
is actually going to go towards provisioning anyways, right? And you're not going to pay dividends. So how do we juxtapose both within the context of trying to take us back to orthodoxy?
So I think, I mean, I don't know that I necessarily agree with a strategy of silent whispers. I think transparency is always, I mean, sunshine
But they
is
weren't
good,
transparent,
right?
though. It was just
So I think maybe it's a timing issue, and that's the reason I'm saying that if this ultimately results in affecting the capability of these affected banks to recapitalize in accordance with what the CBN is looking for, then the CBN has got to think about how to sort of either extend the timetable for them, the deadline for them, or some kind of, again, regulatory forbearance. So if I think about it that way, maybe the timing is wrong. Maybe, but then almost never perfect time.
Arnold?
So the thing is, right, I understand forbearance, and I agree with I understand why forbearance came into play. It wasn't just Nigeria; it was around the world. Quite a lot of central banks actually allowed banks to they gave them this relief, right, in recognizing the stage 2 or maybe some stage 3 or stage 2. Forbearance wasn't a thing that was meant to last this long. Forbearance is normally 12 months, right? So if you want to compare globally, right? Yeah, I think India cleaned up by mid-2021, US, UK cleaned up maybe by end of 2021, 2022.
I mean, but it's not peculiar here though. Anyway, go on.
Yeah.
So in and of itself, it's not a bad thing. It's a duration.
It's a duration thing. So at some point, right, this thing had to end. In my view, perhaps forbearance clawing back should have come before raising this recapitalization.
Exactly.
That's my view. You can't ask them to recapitalize and then at the same time. So that's my only thing. So, but it's something that even as an investor, we all had in the back of our minds that this dividend is not going to last forever, because we all know that when it's time for forbearance to claw back, same thing. India said no dividends. Some banks in the UK, no dividends. It's quite normal. For me, it's just that they should have done this first before asking banks to recapitalize. So because of this, I think it's going to make banks a lot more shaky. Aggressive.
Yeah, but that's just probably going to come from the streets angle. So,
no. That's not your point. Because also the central bank, right? Even the way they did it was, I respect the central bank and everything they do. I believe in the reforms, but the way they did it was a little bit messy in a sense as well. Is you name but you don't name, so you generalize, and then everyone's thinking of what banks.
But they did push out a circular. They didn't name. They just as well. They tried to. I mean, there was a circular.
Well, after they realized the error, they did, right. But the first one, the damage was already done.
So your point is that they should have named the specific.
It's either you name or you just let go and let the banks themselves come out to speak. Let the banks themselves come out to speak.
Isn't that what's still happening anyway?
No, but they kicked it off the wrong way. They kicked it off the wrong way. Is it that you name names or you just allow the or you whisper?
I like naming names though.
Or you whisper to the banks and let the banks come out and say, you know what, guys, we have this in the sake of the bank being transparent.
In this entire conversation, I've been thinking of the song that can best depict earnings season in the banking industry. The declaring bumper profits. I'm thinking of. I'm trying to find the song. It needs to be something like, I'm a big boy, just tossing cash everywhere.
The cash is not going to last.
You get, because we all knew these things were. It's like,
it was in the background.
your room is dirty, right? And then you just throw your blanket over it, and then you cover.
You want to forget.
Pretend. You want to pretend that, and we all knew, right? Now, this is the CBN that knows you know this, right? But you keep on doing this every year. It's almost like, if I leave you, you will do this thing for 20 years, but you have loans to provision for. And the case is, and like we were discussing before we came on air, my thinking is simple. There are many ways to solve this issue. It's either you raise capital, and I honestly believe that you can still raise capital despite the fact that there's a provisioning for it. You can start a narrative that is, okay, we have this issue. This is the plan to come out of it, and this is where we're going into the future. Give a grand vision to the people, sell the story. If you can't sell the story, there's always the opportunity to either merge, be sold, or buy a bank or be sold to a bigger bank. So the idea is, one way or the other, this thing will be fixed. What the CBN wants is a cleaner banking industry. What I won't accept is the fact that we knew for maybe 2-3 years that we were sitting on
5 years. We knew,
we've been sitting on this thing for a while, but
don't you think that perhaps this should have been the first to go? That's my view, because it's a lot happening all at once at the same time.
So this is the thing.
Right.
You are looking at it. You're looking at it from the perspective of an investor. I do get that the CBN may have not managed the optics of this properly, right? But from the CBN's perspective,
it has to be clean.
It's the house. We're cleaning house. We want one thing, recapitalize. You're not just solid enough for where we think we're going, right? The $1 trillion economy. We want you to be. Godre is the advocate of the $1 trillion economy. We want you to be bigger, right? In the middle of that bigger, we realize that there's an earnings season coming. you're going to declare another set of profits. You're going to give dividends again. Meanwhile, this thing, you've not cleared it. Right?
But have you seen the reports from the banks saying regardless they're going to pay dividends?
Okay, but sorry guys.
Let to say,
hold on.
Regardless, we're going to pay dividends.
Yeah, so Chike,
we know which ones.
Is there any reason? I mean, you've got a lot of experience in some of these things, and maybe I guess how some of these things are, how the thought process around things like this. Was there any reason why, or did you think there was probably, a reason why the CBN decided to put this out in the public, sending out that circular, when of course we're already speaking to them behind the scenes? And I'm trying to speak to Tunji's point that perhaps they envisaged that banks were going to declare another bumper profits half year, because we've seen what Q1 numbers were. They were quite robust. And they could also want to declare dividend without clearing the forbearance. Now, bear in mind that forbearance was meant to end this is June anyways. So
there was no need, right?
I mean, to be honest, it's a bit of a head scratcher because banks' financials, right, go before the CBN before they are released.
Exactly.
So a lot of this would still have been under the control of the CBN. So, I mean, there are arguments on different sides of this, right? I think there probably is merit in terms of could the timing be different? But as with many things, there's almost never a perfect timing, right? But could it have been different? Potentially, is the way I would say.
I also think you need to accept the person who is in the CBN right now.
How do you mean?
He's not the last guy. The last guy would have
found a way.
He would have accepted, and
but it was never about accepting.
He would have been calmer. He would have, rolled the can down the road possibly.
I mean, let's leave the last guy out of it.
I think for me it's two things, right? And it takes me back to the conversation we had about governance, right? Because the availability of forbearance does not necessarily mean you take it. So nothing could have stopped,
Stop the banks from reducing their
No, but there's nothing wrong with taking forbearance, though. Let's look at the oil and gas industry, right?
Okay, so why did they take it?
Because the idea of forbearance, right, is let's call your stage 2 loans. There's only 3 stages, and stage 2 loans are loans that you think will go bad because maybe there's a macro economic issue. So let's say an oil and gas company, oil has gone from $120 to $20. I think, okay, Tunji's loan is about to go bad. It's a stage 2 loan. It's not bad yet. And then the central bank comes and say, you know what, this is just stage 2 loan. If you think it's going to go bad, why don't you just let's take a forbearance on it? I'll take it. Because I don't want my NPLs to go crazy, right?
No, I don't disagree. I don't disagree. My point is that it is available, but sometimes institutions hold themselves up to
higher standards,
prudential.
Yeah, but now you're trying to...
No. I don't.
But now you're trying to say...
I'm speaking like an investor.
I'm saying everybody would take it.
But to Chike's point, there were some banks that did...
That's my point. So I'm not saying... It takes me back to the point we made about even lawyering, right? Rules are rules, right? And part of what happens with governance and law and lawyering and those sorts of things is sometimes you push the limit, sometimes you get to the limit of the rules. Some people, so there's a how should I say, a spectrum, and then you sort of operate
find your way where you be in the middle.
So on this one, timing potentially could have been different, but the thinking is not flawed.
So I know. Are there? I mean, we've seen a lot of reports. There was one that made the rounds from our guy Sam today. That rent cap report.
Yeah.
Were there any banks that maybe gave you concern?
See. Speaking
the ones that gave me concern. I mean,
no. You can just quote the.
I mean, like upsides, downsides. I don't made some good money this week though. I mean, listen. It was all positive.
Yes, I mean,
globally that is.
I mean, listen, man. I mean, even when the markets opened on Monday, everyone expected a panic, It was because the letter, like I said, it generalized banks, right? So whether a bank was good or was going to be okay or not going to be okay, you knew that the prices, you knew there was going to be a panic in the markets because of the way the first circular was written.
Yeah.
Are there any banks that we're worried about? Yeah, I mean, everyone was worried about a couple of the tier 2 ones, maybe one or two tier 1s. But I think at the end of the day, some of these guys have come out with statements saying that everything is going to be okay. We think everything will be okay. I'm not worried.
No, that was not the question. The question was
I'm not worried.
the analysis that was done in that report.
How accurate was the analysis? It was quite accurate, right? Was it accurate?
No, it said certain things.
Why are you guys afraid of naming banks? I don't understand.
What report?
It said certain things.
There was a rank.
Okay, the rank up report.
Yeah, it said certain things.
Yeah.
It said, for instance, it said things like, let's just assume that all these loans go bad.
All the loans go bad.
No, this part, yes, because there is a possibility.
All the loans go bad? No, the loans go bad.
Guys,
I mean, what's
the
your
report is
NPL
flashing on the
spike
screen already. I don't understand. So what?
Your NPL spike a little bit.
They
So one or two loans
They didn't
go
name
bad.
some banks.
Yes.
They named Zenith.
Zenith.
Access.
They named
Access.
Access. They
First
named First Bank. They named FCMB. And these banks they came out to also clarify.
Yeah.
Positions.
Yeah,
Some of them have said,
First Bank hasn't come out.
Well, as at the time we taped this,
Yeah.
First Bank wasn't out yet.
Okay.
But they've come out to say, look, no issues.
Yeah.
We're aware of the forbearance. We're working on it.
Yeah.
We're going to clear it. Is that perhaps why we saw a resurgence of their share price?
Yeah, especially on the Zenith side, right? I think that everyone, Zenith is a strong bank generally, or Zenith is perceived as a strong bank. First, G2Co came, I think we all knew G2Co was clean to a degree. Zenith is a strong bank. So regardless, even for me, my expectation was regardless, Zenith is just going to clean it up. Or at least reduce or provide for it. Provide for it. And you know that Zenith is able to provide for it. So a bank like Zenith, you're confident that whatever comes out, they'll be fine. So so that's why it came up.
Yeah, but you see,
I know we could just try to make it to say, I've said enough.
So this is the conversation. This is the conversation. This is the conversation. Yeah, this is the conversation, right? This is the conversation. It's basically the fact that, like I said earlier, the story needs to be changed. You need to come out and say, okay, this is our position. And which some of them have done, even though the maths is not mathing in some of their statements, right? This is it's come, all this math is not, but
because there's no new numbers said in those statements, right?
So, but you are coming in front of the story now, you're now putting in front of people and explaining to people that, okay, this is what our exposure is, and this is what we're doing to clean that side of the market up. So, if you still believe in the story of the bank, you will still invest in it, regardless, right?
Yeah.
So I don't think there's anything the CBN...
Zenith has even come out to say it's like 22% of gross loans, so maybe 10%.
The CBN's mandate isn't to keep banks alive. The CBN's mandate is to ensure that the banking industry is healthy.
Fair enough.
That's different from what you just said. To keep banks alive and to...
he's saying it is not.
It is not. Okay.
It's not its job to keep banks alive.
100%. No, it's not.
But it's not whose job. It's
the CBN's job.
That's completely wrong.
No, it's not.
It's financial stability.
Financial stability. Yeah, financial stability is
not keep banks alive. If the bank
banks can fail.
If the banks needs to fail, then it should fail.
Yeah.
Well, I don't think so. I don't really
when you step above that theory, you find that there are times when the failure of the bank
is
not the option.
Down. Exactly.
And so to keep the market stable, you have to save.
But in that case,
too big to fail.
Maybe that the bank failing would affect financial stability in the banking industry.
Yeah, systemic
but if
situations.
It is not
you're right.
If it's not going to affect the industry as a whole,
if a bank like Zenith or First Bank fails, it will affect everybody now. Those banks, that's the backbone of it.
Anyway, I don't think there's any. I don't think there's any bank failing though. Some of the things that we're seeing, but what I do envisage at some point, I don't know, Chike, whether you see this as well, potential mergers down the line, acquisitions, deals happening
as a result of this.
Yeah, and do you think that perhaps maybe this sector is probably ripe for another banking deal?
I mean, I have to be honest. I don't know enough about this to authoritatively say it will lead to mergers, right? And I think I sort of agree with Arnold that some of these banks are so big and, if you like, so able that they wouldn't be shaken that badly by this. But maybe the smaller banks, and some of the smaller banks have been named in the past as potential M&A targets. So whether this is the impetus, I can't really say. But we've heard suggestions in the past about your mid-tier, tier 2, and down the ladder banks being potentially acquisition targets.
Especially if the
So
bank has
do you
a
think
clean
anything like
out
that, Honey?
book. As a
Do you anticipate anything like that?
yeah, no, I
Would you want to see deals like that?
I actually expect. I want to see.
Like which one?
That's
Yeah, I'm doing your job for you.
So,
Like which one?
so can we remember one very unusual merger in Nigeria between was it Sterling UBA and what was the
Standard
name?
Bank?
Was it Standard Bank?
Standard Trust.
Standard Trust.
Yeah.
That it was an unusual merger at the time because we didn't even know what it was. Was it an acquisition? Was it who was acquiring who? But it was just weird for many reasons. One had a huge name. One had fantastic.
Fun fact, I worked on that acquisition actually.
Oh, hello.
Tell us about it.
And wait, by the way, more fun facts. So let me give you, because I did my own research before I came here, and so let me give you some of the deals that he's worked on, and let's see if he's going to give us, some
tea.
some tea on some of those deals, because
That
I
deal
do know
particularly, I remember it was a head scratcher. That
he
deal,
was
I
into
kept for
a lot of his deals.
months. We're like, who's acquiring who? Because it seemed like this party was the one laying the ground rules, but this party looked bigger.
I mean, I think.
yeah. So
Go on, go.
So no, so some of your more recent deals, that, because it's good that we're segueing into deals now that you've done more recently, and it'd be nice to just get your insight. I mean, I know lawyers don't like to say too much, but it'd be nice to just get your insight.
That deal is one I would like to see more of. Yeah,
Tolaram acquiring Guinness.
Oh, you were there?
Yeah.
Is that you? That's
I'm able to say that I advised Tolaram on that acquisition.
Okay. One of the biggest deals this side of the
Exxon
century, right?
Exxon
For
sale of MPN Mobile.
So-
is it MNP or MPNU? MPNU.
MPNU.
So I'm able to say that I advised ExxonMobil on the sale to Seplat.
Mercuria on financing Owando's acquisition of NAOC. I mean,
come
you
on.
can check these things online. Just go to their website. Yeah.
Oh, Dre.
Yeah.
Yes.
Yeah.
Yes, we
And
advised.
the one that I also knew very well, this is a bit of an old one. That was the one I had to call him and say, give me low down. And he was like, will you get off my phone? I didn't realize that. I'm a lawyer. And that was Diamond Bank's merger with Access.
So I advised Diamond Bank on the merger with Access.
Okay, guys.
wow. Okay.
Eat him up.
Okay.
Which one?
So
Which one's the favorite?
So the two that stand out to the three, so there's the UBA one, there's the Diamond Bank, and there's the Seplat one.
And a lot of the MTN deals, by the way, the very old MTN. I don't know how you, because I remember one of the first times I went to Chike's house, some of the plaques that I saw were MTN, those early MTN deals. Like,
Love it.
So for me, the Tolaram Guinness deal, right? One of the reasons I love it is because I paid close attention to it. And the reason I paid close attention to it because it was sort of working around my thesis, and one of the reasons I moved back, right? It was, we are seeing all these, Nigeria being Nigeria, we're going through this hard time, devaluation, depreciation, interest rates are crazy, policy makers can't figure themselves out. So we're seeing this huge exits of the Western businesses, right? So Diageo with Guinness, Holcim with Lafarge, GSK exited, Unilever, will they, won't they? That's another conversation for another day. And everyone is up in arms, like what's going on? And I've always been like, listen, let me move back to Nigeria. Let's all come back. Let's all just put our capital together.
And let's come back.
And let's
I
buy
love
these
that too.
things, right? Which kind of what happened in Russia in the 90s, right? When the West was exiting, you had all these Russian guys come together.
come back and then basically
buy
just
these
create
things,
new oligarchs.
But unfortunately, we're not doing that. We're seeing the East come. Tolaram, right? Which they've been around anyway, but we've seen the East come. We've seen Huaxim come and pick up Lafarge. But I like that deal, not that I like it, but it just sort of piqued my interest because I feel like, and I know there are more deals like this happening where Western guys are leaving. So it'd just be good to get your view on this, on how we can come and play. And I'm not saying stop the East from coming or Southeast Asian from coming, but like I said, it's one of the reasons I'm here. It's a lot of these deals, even on a smaller scale, they're happening. Right, Guinness is just big because Guinness is listed, but it's just be good to get your view on this, on just how we can actually look for deals like this and see things like this and take advantage of it, rather than coming as a. I mean, I came in as a stock market investor to say, you know what, it's an M&A play. So normally, when there's an M&A play, you sell the one buying and you buy the one getting bought. So we try to do that, right, where it's like, okay, that these guys are they're still selling for cheap, but it's more expensive than it's listed.
Absolutely.
Right? So you take advantage of that. Same thing happened in Lafarge. But it would just be good to hear your thoughts on this and what happened, how it worked out, and we can figure out how we can come in.
I mean, I think a few caveats, right?
Yeah.
And
You
that's,
can't say too much.
and that's the thing, right?
Yeah.
The problem, I was sitting in a meeting once with someone who'd been very senior in Nigerian government many years ago, but he's not a massive business person. And then we're talking, this was a couple of years ago, and we're talking just generally, it was, call it halftime, we're talking. And then he starts to speak about some of the things that you hear Nigerians talk about generally, right? And then he stops. And then at some point he says, look, I know too much. And then he stopped.
Okay.
The thing about lawyers is confidentiality is a burden that we carry.
It's a burden. I love
It's
it.
a burden
But
that
it
we
is a
carry,
burden, yeah.
but it's also what we sell.
Yeah.
So you must have heard me say in response to some of the things that Dre said, I'm able to say we advised on this, that, and we've been fortunate, and I've also been fortunate in my career. I've really worked on quite a number of significant
Deals.
transactions in Nigeria, right? And first of its kind, etc., etc. So the problem is there's very little that you can talk about. There are things you can talk about. One thing, myth to bust, right? We always assume that just because one entity is bigger, that creates a confusion as to who's acquiring who, right?
Boom.
And in truth, it doesn't really necessarily matter. If you think about it, the Seplat MPN transaction, which we worked on advising ExxonMobil, I mean, the MPN target that was acquired by Seplat was way bigger than Seplat. So it makes no difference whether one is smaller
of course.
than the other. That doesn't decide who's acquiring who. And that's the same goes for the UBA Standard Trust, where I advised UBA many years ago. But to your question about, the exit of Western multinationals from Nigeria, if you think about it, Diageo has not necessarily left the Nigerian market. I think what Diageo did is rethink their involvement.
Okay.
And so they've sold their equity stake in Guinness, right? But they've sort of retained interest in Nigeria in terms of they're still selling to this Nigerian market. They still own the brand, right? So essentially, the new owners have bought this company and they're going to be bottling and selling the brands, right?
Okay.
But the brands remain owned by
Diageo.
Diageo. So it's a rethinking of their strategy in the Nigerian market and saying maybe it makes better sense for us as Diageo to approach this market this way. And there's certain products that they still have direct control of into Nigeria. So that's how that's
Okay.
Now, if I think about Tolaram may look to you like a Singaporean company, right? And it is. But that business has been in Nigeria and in Africa for 50 years, no less, right? So it will be foolish of us to think of them as as Asians. If you like, right? So they're locals.
Yeah.
And quite a number of those people that you see there are people who are second generation, sometimes even third generation, who have been born, or if not born here, raised here.
Okay.
So they know this market, and they're able to work some of those assets and their investments better than your Western multinationals would.
so
And that for me, to the extent I can speak about it, is the logic behind how in the short time they've been in the saddle at Guinness, they've been able to make the gains that they've made that were absent when.
So I need to ask this question, and this is entirely personal. On the context of smaller buying bigger, right? So my mind has always been around the fact that, nothing ventured, nothing gained. And you see and also speaking to the question Arnold asked about, West exiting, the East coming in.
Or local champions.
Or local champions. The preferable, at least to us, would have been Nigeria.
If we bought it, yes.
We bought it.
Yeah.
The question is how because the context is, because I was about to answer his question and say we don't have the money need.
No, but you know we do, right?
But no, the people who have interest in it don't have the money.
Go ahead, yeah.
So how does a player who doesn't have that capital, step up? Because you have the interest in it. Because sometimes your interest then brings in the capital you need to be able to acquire the asset. So have you ever seen those kind of deals that happen, that the person just stood up, started making the deal, and then the capital came in, or it was always just set before the deal started to materialize?
Let me deal with this slightly differently, right? If I go to the oil and gas industry, we've had waves of IOC divestments, maybe 3 waves, 2009, 10. There's another one, maybe 2013, 15.
Yeah.
My dates may not be precise. And then there's the most recent one, right?
Yeah.
And again, I've had the privilege of advising on many of those deals. Many of those transactions, again, to the point about rethinking strategy, the headlines will say the IOCs are exiting Nigeria. If you go behind the headlines, you would find that it's not exiting Nigeria. It's about their mature assets, right? Some of them may not necessarily be as economic as they were before for those players.
Yeah.
There's restiveness in the onshore space and maybe shallow waters, right? So some of the internationals are now concentrating on the deep offshore. If you look at the deep offshore, you see that the likes of Shell, Mobil are announcing potential investments in billions of dollars. So it is rethinking their strategy. And then what does that do? You create Nigerian players who are taking over. That's the Templars of this world, the O&Os of this world. They're taking over, right? Where does the capital come from? Some of it is debt, some of it is equity. The Afrexim's of this world have been very supportive. But you also find that some of the sellers are supporting some of these transactions.
How do you mean supporting?
So they're lending. So if you look at the trading arms of the IOCs that are selling are oftentimes part of the lender group on some of these transactions, right? And also, many of those trading arms are off-takers. So they're not
totally. So they're removing the liability and just risking their investment.
So you see that some of them are willing to put their money where their mouth is and say, okay, we're lending to this acquisition.
Go ahead and do it.
So they're selling on one hand, they're lenders, right? They're off-takers.
Yeah.
So in a sense, so if you have a deal where this international is your off-taker, and they're actually part of the lender group, it sort of gives confidence to others to
100%,
to
yeah,
participate, come and
as well.
participate in it.
Yeah.
So and then in some situations you find that if you look at an NLNG, right, NLNG is an interesting entity.
They
that
also
has
did the single train deal, isn't it? Were you on that?
Every time he drops it, I
So
see
please,
his
you guys
eyes
are not,
blink like, oh my God. Right?
No, but NLNG is
That's what I'm going for very
it's an
soon.
interesting entity, right?
Yeah.
You've got NNPC, you have Shell,
Yeah.
you have Total, and you have ENI as shareholders. And it's an entity where the shareholders play an active role in managing the company. The shareholders have supply agreements with the company, right? Now, those supply obligations are backed by upstream assets. Because they supply gas to NLNG, NLNG then processes the gas into, liquefies the gas essentially. Now, so if an IOC is selling its upstream assets or its upstream company, right? It has to be thinking about how do I satisfy my supply obligations to NLNG, right? And whatever it is I'm doing in this transaction, I must find a way to ensure that I don't breach my supply obligation. So that way they also provide some kind of support. So it's not as simple as the headlines look that, these people are stepping
And
in.
of course, the headlines just go with
Whatever.
is most
Whatever. Are these guys trying to solve me? Which was that?
Yes, but the thing. So I've been thinking about it for a little
Tunji
while.
just got schooled right now.
No,
See how excited he is. He wants to acquire a target. So they've told you that you don't need money to acquire.
You
You don't need money to acquire.
Find someone that will lend me money to buy
I can't lie
that.
to you. I cannot lie to you. I see personally. I see a huge opportunity with redefining retirement savings across the continent, not just Nigeria. I'm thinking outside Nigeria a lot, And the thought for me is, we have the product. I could just export the product, and this was what we wanted to start doing. We could just export the product and be like share with everybody else. But I'm like,
What product are you talking about now? The pension savings?
Yeah, pension savings.
Okay.
But the core business is that AUM, right? The fees on the AUM. So why am I building AUM for you, right?
Maybe you can actually
When I can build it for myself. And but the thinking is, if you check the Andrews, there's no Andrews anywhere that has money. So it's not like I can go to one uncle and say, hey, give me money, right? But these are things where I know that the person who owns the asset, the person who knows the asset knows I can sweat it better than he does, right? So how do I do this? And the thing I've been thinking through is, how do you possibly build that capacity to be able to buy these assets and make it work in Ghana, make it work in Rwanda, make it work in Kenya?
Who are you, the buyer? Are you an asset manager or are you actually a strategic?
I'm strategic. I don't want to. So I could necessarily pass the asset management on to someone else, but I want a piece of the fees on the asset management.
That's an interesting.
I don't want
That's like eating your cake and having it, isn't it?
No. No. Here's the thing. I totally understand what my strengths are. My strength is in asset management. I could do what Arnold does, right? But the fact is, Arnold can't do what I do, right? Do you get?
Which is mobilize.
You get that.
Mobilize
so
the-
what I
the
can
savings.
do is get into the streets and mobilize
But
capital.
Chike, isn't that something that regulation solves? Like, why do you
No, it
have
doesn't.
to?
It doesn't solve it on the African continent. Everywhere, there's nowhere on the African
So
continent.
essentially,
Can you acquire
PFAs earn money from fees that they make on AUMs.
Yeah.
And so, but PFAs are not probably, very good at retail mobilization of savings. So they are good at retail mobilization of savings, but they don't earn fees on the AUM. So I'm thinking, isn't that something that you could write into a regulation that can allow you to get a share of the fees? I don't know.
So as he said,
Like,
there are
Because I'm
things
also
there are
trying to
things
get my
you
head
cannot
around
say.
the fact that you want to be on the side of the strategy, but not manage the AUM.
Yeah, so why don't you
have to
get a
do
fees
both?
on the...
No,
you have to
no.
do both, 'cause if you're
So
You can even get any fees on the amount of business.
the best regulation. Let me tell you, and I shouldn't be saying this on air, but the best regulation is where you create a structure where I do what I do best, and
then
you
you
do what you
get
do
an
best,
asset manager to
and then we
manage.
split the fees. Because in
Yeah.
Nigeria, the fees are
That's what I'm saying. Don't you get the fees on the savings you're mobilizing?
no. We get a fees different way, but it's not on the.
Anyway, let's not turn this into a
It's-
pension.
because the AUM,
But I
the
get my head around.
There's a whole lot to talk
the
about.
fees on AUM doesn't stop in year 1.
No.
It's year 2, year 3, year
Yeah.
10, year 5. So that I can calculate into my future earnings. But in the way my fees are structured, I most players, because they know there's no regulation that gives me the ability to do what I want to do, they want to tie me to year 1 alone, right? I want to be able to know that I can spend over the odds to acquire Arnold because I would earn on Arnold to year 10.
Why would
or
you
year
earn
15.
fees on what you didn't raise?
No, that's the point. I brought you in. So I should be able to earn on your fees for the foreseeable future.
Okay.
Right?
Yeah.
I think we'll also do a pension show very soon as well. I want you to break
Yes,
this down.
yes, yes.
But one transaction
can bring-
I want to also, talk about Chike. I think you also worked on that transaction. I may be wrong, but I think so. And we absolutely, when I was in the power sector, we absolutely hated that transaction. Yeah, I think we've had an argument on it before. It's basically seen as one of the worst power transactions
Let's hear
ever.
it.
And it's the Azura power transaction, where the government went into this deal with Azura Power and then some irrevocable, contract where regardless of whether Azura supplies power or not, they must earn their capacity charge or whatever it is their revenue is. It's purely guaranteed, right? And I've been in several fora, even in training, external training, where
That's
the
a
facilitator
case
comes in,
study.
and as a case study, it's like worst power deal ever, and blah 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 blah, and all that because of the sort of contract that the government went into. I think that contract was done maybe during the OBJ or Yaro, I can't remember anymore. So why do people hate that deal, or why is that deal? Because on the other side, when you speak to lawyers and the Genco guys, that's the power generation, they tell you that's the best deal ever. They wish they had that deal because of the way the power sector is today.
Again, one has to be careful speaking about this. But I think the important thing is the Azura Power Project was supposed to be, it was the first truly project financed independent power project in Nigeria. Before Azura, you had the Enron AES transaction, right? That was supposedly an IPP or was an IPP. But Azura was the first truly project financed IPP in Nigeria. And so it needed to create a model that unlocked capital coming into the power sector. Azura was supposed to be a template for a limited period of time. So we had to have sovereign backing. Now, if you think about it, the reason why
why?
The reason why you're going to you're doing a PPP, right? Is the public revenue is stretched, and so you're bringing in private capital to deal with or to finance something that historically or typically will be financed by the state, right? And historically in Nigeria, power was a public good, right? So you're trying to move away from that, and you're bringing in, so you have a private project sponsor, right? The Nigerian market has chosen to have a bulk buyer. And the bulk buyer is who? Backed by the government, right?
Embed.
Yeah. Now, you also have a market in which, and you know this, right? The economic market price for power was not being paid by the buyers of power. We agree with that, right?
Okay, so that's what they call the cost-reflective tariff and all
Yes.
that. Yeah.
So how do you make it attractive for private capital to come into a space where the price is regulated and there's no rational way of recovering your investment? So those are the sort of things that you think about. Okay, so how do we price this right? How do you ensure that if you sold power to the bulk buyer, that you got paid. How, back forth. And at the end of the day, we ended up with a World Bank partial risk guarantee on that, which a lot of people look at today and say is a saddle around the neck of the Nigerian government, right? But if you didn't have those elements, you wouldn't have been able to attract the massive private capital that went into Azura. If I remember correctly, Azura was somewhere between 800 million and $1 billion of investment.
Of that time.
Right? So the idea wasn't that the Nigerian government will underwrite the power sector indefinitely. It was, if we use that as a test case where private capital could come in, there was the World Bank partial risk guarantee, right? Behind which sits a Nigerian government indemnity to MIGA, the World Bank entity, right? Then, if you prove that case, then in the next deal, maybe it will look like Azura, but over time, there'll be so much faith and proof of concept in the market that some of that sovereign backing will begin to fall off. And the lending market and the investing market, equity investing market, will have such confidence in the market that, capital will come in, right? And then obviously, if power supply is improved, if the knock-on effect in terms of creating value in the market, enabling businesses to grow, because the lack of power in Nigeria means that everybody and their mother is buying diesel, buying petrol, etc., right? I tell you what, right? And you've known me long enough, right? I remember I wouldn't say when, but okay, in 2005, right? I was headhunted to go and work in the firm that I work at now, right? And I remember in those days, it was unusual for law firms to pay sign-on bonuses. My sign-on bonus to go to work at Templars, right? A sizable chunk of it was to purchase some massive generator.
Oh, wow.
I was ready to hear land or stock.
And that's a shame.
Generator allowance.
Wow.
I know I was paid a sign-on bonus, and I remember that a sizable chunk of it, maybe 1/3, maybe a little above 1/3 of it, went to buy a generator because I couldn't guarantee power supply to where I lived.
Wow.
So if you imagine how everybody around Nigeria is, I think that as the Azura Power Project is maligned unfairly. It was,
but isn't that why a lot of we didn't now see more projects like that? And then I also kind of think maybe that's what affected the Lekki Concession as well, because it was kind of similar, and it was a PPP, built the Lekki Expressway that we know today, and all securitized around cash flow from the tolls, and then with issues around tolling and people not allowing the second toll gate to come up. That concession essentially fizzled out.
I think in many respects, the Azura experience, right, created a trauma, right? And wrongfully, right, in my view, so much so that, the Nigerian government is sort of generally allergic to sovereign guarantees for projects that they would want to see privately funded. Right, so you look around infrastructure projects in Nigeria, right? You look around things like roads. Almost everywhere you go, you see dead bodies in terms of projects because the state wants certain things to happen, but it's not prepared to provide some kind of backing. And if that backing is not there, and if you're controlling the price,
capital won't come.
And there's no minimum revenue guarantee, then it's nonsensical.
I do remember something though, and we've said it here many times. It's all about the narrative. It's all about the story behind the context. There's nobody here who has ever driven on that Lekki axis who would think that the Lekki concession thing was a mistake. It was absolutely a needed project that needed to be paid for, right? It needed to be told, it needed to be paid for. However, because government, at least in Nigeria, in the Nigerian context, tries to portray itself as the father of the people, without just basically explaining to people that if you eat food, you actually have to pay for it, right? That fed into the people's understanding of what that project should be. So they expect you are the government, you should create roads for us, we pay taxes. But in the grand scheme of things, if you want to have world-class infrastructure, you have to pay world-class fees. If you go anywhere in the world, you do pay these fees. If you park somewhere, you pay the parking fees. So I feel the issue wasn't really that those PPPs couldn't work. It was that the governments were trying to still portray themselves as we did not do this. We're for the people. We can provide everything, knowing that you sometimes do not even have the capacity to even provide those things.
But that's a classic case of subsidy versus lack
I'm
of subsidy.
telling you.
That's exactly what I was going to say.
And
I mean,
it's
that's
not-
subsidy, and it's something that happens around the world, right?
It's social engineering.
So if you want it to work and you are a responsible government, there is a place for actually explaining to your people where the financial situations are. So we want to create this rule, right? We do not have the money to create this rule, right? We do not have the money, but we need to create this rule. And we want to be able to get this capital to be able to create this rule. Now, this capital needs to be paid for, and it's going to be paid for by tolls, and it's going to be paid for in a transparent
Easier
manner.
said, but
It's easy. No, see,
And
the
people
thing
will
is that
listen.
when
I
you
mean,
start with the conversation, people can actually say we don't want it, right? And then you leave it.
I remember very well that transaction. I know how well. I think it was done under Fashola also. Made so much noise about it. But beyond that, Chike, there are a lot of infrastructure projects that we need to do now. I also want to talk about oil and gas later, but let's stay on this infrastructure matter. And they would always say we have a very huge infrastructure deficit in Nigeria. And I guess one of the ways to finance that infrastructure deficit, seeing that, like you said in one of our previous episodes, that the budget is not big enough and we don't have money, is PPP.
Yeah.
So how do you then structure PPP in a way that it provides the sort of guarantees that the private sector wants or investors want, and at the same time delivers the service that we need, and then people are happy to pay for that service? I mean, we've seen these things work in countries like the US, you've seen it work in most European countries where they can come, concession roads, concession tolls, and then people are happy to pay to use those roads, and people still have alternative routes anyways. And you can have that even with water, with power. Why is it not working here? Is it a deal?
I think
Structure of the deals?
many of these things it's very simple, right, to explain why they go wrong. Now, and it's probably very simple to explain what is required to make it go right. Now, the complication is in actually implementing those things to make it go right, right? So if you think about it, capital is scarce. So capital will go to places where capital is welcome. Capital will go to places where profits are guaranteed, is not the word, but there's a clear line of sight to how profit is achieved. And there's also a clear line of sight to how the capital invested comes out and profit is extracted, right?
Yeah.
So it's as simple as that. So what leads you to profits, right? Is price or cost plus.
Margin.
Who's paying that cost plus? If price is regulated, then it's a non-starter,
Yeah.
right? Now, if price is regulated, but there's someone who's making up the gap between the cost
Which is subsidy.
and the price which does not reflect the cost, right? And that person who's making up that gap, be it government, be it somebody else, is credit worthy. Then capital could potentially go, right? Then there's also things around trust in the system, trust in the market, right? Part of the problem that we have had over the years in Nigeria is also the thing around inconsistency in government policies. It is the risk, and it shows up now and then, right? That a change in government could mean that something that looked very good on paper, that you had faith in going
All of a
in,
sudden looks terrible.
is suddenly reversed, right? So it is those sorts of things. So if you look at fund managers who invest in places, emerging markets, frontier markets, even in Africa, right? You'll be surprised to hear that some smaller markets where there's, sanity, stability, right? Clarity as to how governments behave, clarity as to enforcement of contracts and those sorts of things, sanctity of contract and all that they do better in terms of attracting capital.
Yeah, definitely.
Or at least in terms of transactions or projects starting and finishing than Nigeria. And you'll see that in some of the, even some of the regional banks who invest in places like Nigeria and elsewhere. You may find that they start a project in Nigeria and it takes a long time, right? But they go to smaller markets, and maybe it's because of skill, maybe because some of those, countries have, I'm trying to use my words carefully, right? The governments behave better, right? So long and short of it is, there has to be clarity as to how, if I invest in infrastructure in Nigeria, my capital is going to come back, profits will come, right? There has to be certainty that, somebody doesn't come and say, I mean, if you think about the Lekki toll road even, right? Luckily, the government bought it out, right? But it wasn't intended that it will be sold to the government. That concession didn't.
Why do you say luckily that the government bought it out? I don't think it was a. I'm not entirely sure it was a good move to buy it back.
No. So from the perspective of the investor, of private capital,
I understand what you're saying, because
I get that.
over time you're not sure how things work in the next 5-10 years.
So how do you deal with the social issues, though, the social factors? Because that's also important. We've talked about profit, we've talked about assurance, talked about price, but the social factors matter, especially with PPP. How do you then deal with it? Can the contract deal with it, or is it something that government just has to deal with? I think Tuju also raised it now. How do you manage things like that? Because it's important.
So again, right? Oftentimes we speak about concepts in absolute, right? Subsidies are not necessarily a bad thing, right?
Yeah.
Now, we have had, if you look at Nigerian economy, right, there were the days pre-indigenization, right, or post-indigenization, where if you look at a lot of the companies in Nigeria, you see, if you think about it, the banks, right, when you're 50 like me, right? So when we were
when you were in high school, in the dark ages. No, in the Stone Age, when you were 12 years old.
No,
when you invented wheels when you were 5 years old. When the wheel was invented.
If we went back to the 80s, right, in Nigeria, right? If you think about when Babangida was president in Nigeria, quite a few of the banks we had were either government owned wholly or largely government owned. So there's a lot of privatization that happened under, Babangida, or commercialization. So we've seen proof over the years that the Nigerian government, if not any other government, at least Nigerian government has had, has not really been good at running businesses.
Things, yeah.
Now, you can engage in debates about whether or not governments should be running businesses, and there's a capitalist idea that they shouldn't, right? But there are also places you may go to and you see some governments sort of do a decent job running businesses. So let's forget about that argument. At least in our market, we've seen that the public sector has not been able to do this, right? So if the public sector, in a manner of speaking, is outsourcing the management of the economy, provision of infrastructure, etc., to private sector, right? And some of these things are things that are deemed to be public goods, right? Roads, bridges, etc., hospitals, right? So it is not necessarily wrong if the state was providing some kind of bridge, some kind of contents in there. It could be public sector support, it could be government guarantee, it could be a subsidy or whatever, right? To deal with the social content, right? The social side of things. If you remember in the power sector, there was a time when it was being looked at as a certain consumers in certain bands will effectively subsidize the retail market, right? Now, is it good policy? Is it bad policy? It is a way in which
I'm dealing with a social issue.
You're dealing with a social issue where the big boys, if you like, were paying more than.
But do you think? And this is my problem, right? Do you think that we ran too long with the narrative that Nigeria is, at least from a revenue perspective, at least from a fiscal revenue perspective, is a rich country, to the point where the people started to expect things that they were not due, in terms of, oh my God, we produce oil like Saudi Arabia. Look at Saudi Arabia's infrastructure. Why do we not have that?
Tunji, thanks for that question, because I think I need to correct an impression, right? So when I say subsidy is not necessarily a dirty word, right? It's not me preaching for subsidies to be introduced. I was just answering theoretically the question. If there's a gap somewhere, someone has to fill that gap.
Yeah.
The best market is a market in which you have a willing buyer, you have a willing seller.
Yeah.
This is my cost. There's competition.
This is what I can pay.
And at some point, maybe competition drives prices down, right? So that's the best market, right? But these things, you have to balance things somewhere, right? So my point around subsidy is that that's an option, and it's an option that has been available and has been used in different markets. So it's not necessarily a dirty word, but to Tunji's point around whether the state can afford subsidies is a different conversation. And obviously we've seen that in the downstream sector, right? Oil and gas sector. The abuse, the waste, etc. So is Nigeria a wealthy country in that sense? I think there are indicators that it isn't. Have we over the years given the impression and therefore created a sense of entitlement? Perhaps we have. But that's a... I think, and that always plays into political seasons. Where people who are trying to get into office, give the impression that when I come in, because there's so much money being, and I do not say that there's no money being stolen. I do not say there's no money being misappropriated. I'm just saying that the magnitude of it isn't compared to what we think we should be having. Now, there are things that we're not utilizing. So there are mineral resources we're not taking proper advantage of. There's gas we're flaring that we should be converting to revenue. Those are conversations of waste and effectiveness and efficiency. Those are two different things. That's not revenue being stolen. That is money you never got in the first place. You were just being too stupid to put the money into your pocket. Now, the question is, for the average Nigerian who generally believes that because he's a Nigerian, he should have access to certain things, and then when political season comes, his entitlement wants to be able to grab what he thinks he's entitled to, instead of being able to listen to the person who has a structural plan to be able to get us where we are, from where we are to where we should be, is the problem. So the best politician for Nigeria today is the person who knows the truth, fully understands the truth, but still can give you the poetry you want, and then somehow mix both of them into a...
But I think it's also an image thing,
and
right?
give it to you.
For some reason, I've noticed that this Giants of Africa thing, we tend to think that we are bigger than we are, richer than we
I
are.
went with Giants.
Giants.
Giants with in
GDP
what?
or in inflation?
In what?
Which one are we giants in our currency value? Which
In
one?
what?
We're not, and we're not.
Okay.
So that one.
In Afrobeat.
I will not. I mean, I won't
I
Is it
can't
my piano
copy that. No, I know Afrobeat is bigger in the world.
Sorry,
I won't
Yeah,
presume
sorry.
to advise politicians on how to go about their
run,
business, right? But I mean, speaking specifically about getting some of these things right? I mean, you if you look at specific products and specific markets, right?
Mm-hmm.
It may well be that the average Nigerian pays so much more for power than they would have if you actually you took away the price controls and ultimately allowed the market to decide how much power costs and how much production of power costs and how much the product will cost the buyer ultimately. If you think about the mix of what we spend, there's you have mains power, you have your a big pass my neighbor, and all sorts of things. When you add all of those things, it may well be that if you allowed the market to sort these things out,
Probably would have been,
it'd probably be
things would have improved.
maybe, who knows?
I mean, that's why I talked about the political will last time.
Absolutely.
Yeah. So I mean, let's segue into oil and gas. So I think that we've gone the better part of the last decade or so, and we haven't really seen mega IOC investments. Rather, we've been seeing divestments like you just mentioned now at the onshore side, looking like potentially more deals could be in the offing. We've been talking about government trying to attract investments at the upstream level so that we can at least move from the 1.4 million barrels per day to 2 million barrels per day. How do we get there today? Especially with we've seen again, PIA is there, hasn't really unlocked the so-called $20 billion investments that we're expecting. I know Shell has already announced their own FID. They're stuck around trying to get the Ogoni people to allow us start to produce. But whether we like it or not, that sector needs capital. And so what sort of deals do you think we should be doing as a country beyond just perhaps maybe selling to the IOCs divesting? How do we get the big boys in?
I mean, what have we seen happening, right? We've seen the divestments, right? And those divestments have created Nigerian champions. And some of those Nigerian champions are going to continue to grow. Seplat is the poster boy, and then there are others, right? We've seen the Renaissance acquisition of SPDC, right? So those companies will ultimately prove their mettle or disprove, who knows, right? So that's one segment of the market. And as you're right, Shell has announced the FID for Bonga North, right? ExxonMobil is also speaking about there's Usan, Owowo, and all of those. So there's those investments in the deep offshore that will happen. There has been a recent bid round where exploration licenses have been awarded. There's talk of a potential new round. So we'll see those. And then obviously we'll see how those players go from exploration to production. And obviously capital will be the name of the game. There's also some indication that this government may look at NMPC and maybe right size what NMPC has in terms of assets.
What is right? I mean,
So there's a potential that the assets that are in the hands of the public sector in that market, right, may begin to get privatized. So there's a possibility
interesting. Okay.
to sell down. And if that were to happen, that could also create its own opportunities.
Yeah.
Because again, back to the point around whether a public owned entity is the best placed person to work those assets, right? So I mean, it's
In Nigeria, I can tell you it's not.
Yeah.
Especially when it's a service-oriented business, it's not.
so those are NNPC divestment could be a factor that.
So do you think the
That also-
NNPC divestment comes before the IPO? Because I'm sure you I like to think that you probably have a view on that.
I mean, I beyond.
I know. Always looking for insight.
That's why we came. That's why we came.
I mean, I think we're all watching to see what will
Okay.
happen.
But one thing I was going to ask you though, and I think that, I mean, not trying to get us back to that banking sector issue, but one of the things that people have always talked about is how the locals have often funded some of all these transactions. And it kind of looks like we've seen more of debt-funded equity. So they say it's equity, you're buying equity, but it's usually behind the scenes, it's some kind of debt. That's funny. Not that it's rare, but a lot of this debt is really very expensive and short-term. So we know that there's likely to be a lot of deals that would happen. We've seen just a few last year alone and mega deals. And like you said, it's likely more coming. How do these deals get financed now? Is this still going to be the same old way? Or with CBN and its orthodoxy, it's going to be a different package? What do you have to say?
So the question being, are we going to see equity materialize from nowhere?
No. So there would always, I mean, equity needs to come from somehow, from somewhere. It could be real raw equity, or it could be equity. It could be debt, leveraged equity. But my point is, before it's always been maybe a consortium of banks, 4-year loans at 20 plus interest rates. I think it's obvious that model is broken. It just can't work, and that's why we're seeing a lot of all these write downs and issues in the sector. So
Why is that model broken though?
because the tenure of the loans are very short,
Okay, yeah.
and then the interest rates are very high for the sort of capital that they're financing.
They're deploying
right?
and
And
kind
so
of-
what tends to happen is that they always restructure the loans or refinance the loans, restructure the loans, and at some
But
point,
I think we're-
and then when price moves against them, they now start to take write down. So what sort of structure would work now?
But I think that we're seeing, sorry, just to, before you answer, but I also think we're seeing a change in this debt profile, right? And we're seeing it in a short period of time. So let's say 2 years ago, we were seeing a lot of short-term capital rights. Last year, the same thing. But if you notice now, we're seeing a lot of infrastructure type funds getting shaped. So we're seeing money that's willing to sit for 10 to 20 years. Interest rates, yes, there might not be, because still you can see the curve is still inverted, where on the short side yields are still quite high. Investors still want high yields, and there's still more liquidity here. But I'm also seeing a wave of this infrastructure, these funds coming to play, or this type of investor coming to play that's a bit more patient. Even the pension guys are starting to have conversations to say they're starting to realize that it's the pension industry that will fund infrastructure. And so you're seeing pension funds now coming to infrastructure funds, which I'm sure you're seeing on your side. So we're now seeing this money start to get a bit longer. So I think over the next 5 years, over the next 10 years, you're going to see this, the debt profile or the investor profile change to start looking at longer money. But please feel free to speak on this. From
I
your
mean,
perspective.
I wish I had a magic bullet for this, right? But I mean, I think you're right. There are certain initiatives. Even the government is pushing for an infrastructure bank.
Yes, yeah.
So those sorts of funds, I think at the end of the day, it's about magnitude, right? It's about magnitude. But the way I look at Nigeria, and I've always looked at Nigeria, and that's what has enabled me work in this market for as long as I've worked in this market, is that I believe that the improvements in Nigeria would almost always be incremental, right? And so I don't necessarily look at the negatives, right? The negatives are there. It's important to look at them. But if I think about it, right, you mentioned MTN, right? I was there at the beginning of the MTN story, right? I was there in the room representing lenders, Nigerian lenders and some international lenders when MTN raised their first financings in Nigeria, right? And their first few deals, we advised the lenders in a previous firm that I worked at. And the concept of a 5-year loan, 7-year loan was unknown. It was unheard of in Nigeria at the time, right?
Were they familiar with them? 2-year loans?
Yeah, because of the shortness of the tenor of the deposits, right? And what we ended up doing, so the first deals were structured as commercial paper, right? And then I think we got to a place where we had to price those transactions. If I remember correctly, it was probably, you said 7-year tenor, but it was actually 7-year tenor of the first segment was 3 years, the next segment was 2 years, and the third segment was 2 years.
So in phases.
So the idea was that after the first 3 years, you could reprice. After the next 2 years, you could reprice. Yeah. After the next, so that enabled a market that wasn't used to
long term.
Yeah. But this project, quote unquote, right, the rollout of the GSM infrastructure required longer dated debt.
Yeah.
So the compromise was that we structured this in a way that, okay, tolerate 3 years. Yeah. After 3 years,
that's fair.
But it was 7-year money.
Wait. Why did you say that's fair?
Yeah, because if it's as an
investor,
investor,
the failing of this entire conversation is the people bringing the money, which is
no. Because if as an investor, you don't understand long-term money. I'm allowed to reprice every 3 years. I'll get involved.
Why does it not understand?
No, this is debt.
This is debt, right?
It's debt.
Yeah, I'll get involved because you're allowing me to reprice every 3 as an investor. That's a steal. That's a deal. That's a good deal. So I'll look at it. So in 2 years, we revisit the environment, market environment.
But think about it. Now think about it.
Higher. Yes.
Since then,
I'll take that deal.
No, I'm not saying you would whether you take it or not.
Yeah.
I'm saying why don't you understand it?
It's not about understanding it necessarily. It's about the fact that there's a mismatch.
So you understand it, right?
Hold on, let him.
No, but there's a mismatch between the deposits you hold, and the loan you need to make.
Yeah.
So that's the
time mismatch.
Yeah, that's the way you enable the lenders do a deal that they'd never done before, right? Now, if you think about it, we're talking 23, 22 years ago. The market is different now. You're seeing that Nigerian market actually can fund projects for longer than that right now.
But not 10 years.
We're not there yet, but I'm just saying, so if you think about it, there was a time in this market it was impossible.
Yeah, so slowly it's getting
got there.
Yeah,
then, we're making incremental progress.
Yeah.
Now, not necessarily in the oil and gas space, but something also that I'm seeing a number of players in the Nigerian market do now is rethink the idea of borrowing in FX. We always had this thing about you borrow FX because you're going to import this and that, right? And then you suddenly have a mismatch between your revenue and debt service, right? So a lot of people are thinking now in terms of borrow Naira, convert immediately after you borrow.
At least your obligations are
absolutely, right? And then even if the currency moves against you, right? Or just moves against everyone, right? Your revenue is still in Naira. There's a possibility that your revenue, in terms of your pricing, goes up to catch up with inflation, catch up with devaluation, but you're still borrowed in Naira.
Yeah.
So no FX exposure.
Yeah.
So that's one tool that we're seeing a lot of people use.
Yeah, I mean, I've never been an advocate of
I'm just of the fact that maybe the large part to that in that story in Nigeria has always been the lenders, that they do not understand certain things. Like Arnold just said, he doesn't understand he understands it, but in the context
Listen, if today you came to me to say, listen, I need 10-year money, but every 3 years we reprice. I'll take it now.
No,
don't
agreed.
understand. It's
You would take it, but because where MTN was coming from, they understood 10-year tenure.
But
Now
No, but
in
let me- but let me-
Nigeria, they needed capital, so they were forced to take this revolving door.
but let me tell you what it is. But let me tell you what it is
Market
from
as you find it.
Exactly.
let me tell you what it
this
is
was
from market
true from their
perspective.
perspective.
Yeah.
What I'm saying is they came to a market that should have been, and the way we call ourselves giants of Africa, should have been savvy enough to be able.
Tunji, you're living
But this was 20 years ago.
But even today,
No,
but
yeah.
you're living in
I'm talking about today.
But even today, let me just.
Nothing has changed in the
Investor landscape mindset. But
in Nigeria 23 years ago. Now maybe you have more deposits, but nothing has changed in the mindset of a Nigerian in how they keep money.
But
35 years ago and today.
But you also realize that a number of multilaterals, right?
Yes.
Now, again, maybe it hasn't grown wings, but a number of multilaterals went into the Nigerian market to raise Naira,
Yes.
right? And the idea behind the raising the Naira was also trying to get us away from some of this FX
Yeah.
things.
Yeah.
Now,
And
now how well they've done, I've not really tracked, but the thinking behind that was, let's raise a pool of debt, right? That we're able to, deploy in this market in a way that sort of solves some of these FX mismatch issues. So my point around this is that if you're looking for the perfect Nigerian market, it may never happen.
yeah.
But pockets of success, pockets of progress is the way that I see this market.
But also,
and I
Tunji,
totally
quick one,
agree
even
with
from
you,
an
but what
investor's
I wanted-
perspective,
Yeah.
even from an investor's perspective, this is why I like the bond market. Bond market
Yeah.
tells you what the market is thinking, what an investor is thinking, right?
Yeah.
Going back to the bond market theory, we're in an inverted yield curve. All the yields here are high, and all the liquidity. Look at the money market funds and the asset managers. Money market is almost it's over 50% of the makeup of the AUM, the asset management industry, and that's because there is very little hope for the future. So give me the returns now. I'm going to deposit with you, and I want it now. I don't know what 7 years looks
You
like.
are
I don't know what
making
10
my
years
point.
looks like.
I'm saying
that's why the market is shaped the way it's shaped, because
that group of investors is also one of the problems.
but it's the
Because
countries where the
you look
is
at
it
a
the borrowers
market-
or the lenders you're talking about as a problem though?
it's the
the
lenders.
borrowers.
It's the lenders you're talking about, right? So you're talking about
He's talking about the borrowers.
So what, you're saying the borrowers is the problem?
That's what I'm trying to get.
No, sorry, the lenders.
Yeah.
Okay, so that's my point now. So, and that's what I'm saying, just so that we can close it, because we're almost rounding up. All right, so I hear you, but my point is, or what I really want us to get into is, there's not a lot of time, but we need to really break this down.
Yes.
I do think that the way we would fund deals for today can't be the same way we fund deals years ago. Otherwise, we will face the same kind of problems that the banking sector is facing now with forbearance and all that 10 years from now or 5 years from now. So isn't there a better way to structure capital that you don't need banks to lend you $1 billion and wait 10 years to get that back? So in the US, at least from what I know, and most developed economies, when they fund you, they can basically repackage that debt, whether into asset-backed securities, securitize that debt, and then sell it to
asset
pension
managers,
funds or asset managers, people who want long-term
investors.
returns. Why is it so difficult to package deals like that here? Because I haven't seen anything like that yet, at least at that scale.
I think it's a combination of factors, right? At the end of the day, we created a pension industry in 2000 and after 2004, the Reform Act, right? And again, for me, it is that Nigerian story of incremental improvement. If you think about before the 2004 Pension Reform Act, right? A massive portion of the pension liabilities of the public sector, of the private sector in Nigeria was unfunded.
Yeah.
That's why we heard those stories about retirees
Dying at
queuing
the
up
queue.
and dying. So
Things like that.
you have to acknowledge that 20 years down the road, that
Pension story has been a
that
success,
product has made some impact. Now, regulation as to what is permissible investment, right, sort of constrained the pension market, right? Now, regulation has moved, right? And so on paper, our pension funds are able to invest in infrastructure funds, they're able to invest in real estate, they're able to invest in private equity. So alternative investments are now permissible to some degree, right? Asset allocation rules, etc. Now, I mean, I'm not the expert here, so I'm sure that those of you who are in the pension industry will speak a little more about this. But it's the availability of, part of the problem is also availability of the product. Part of the problem is also the savviness of the market, risk appetite, etc., etc. And I think regulation has helped in segmenting funds. So that, if you were a younger person,
we have about
your pension
76
savings
funds
could,
or so
be deployed to. So long-term capital could potentially come out of our pension industry. And you're right that, securitization is a potential window, for recycling or, creating assets, essentially. So as banks, create assets, they're able to, securitize them, and therefore that way, creates the capacity to, to create more assets, and that cycle continues. But at the end of the day, if you create those products, you need someone who's going to buy those products, right? And so it's almost like is a catch-22, right? Who goes first? And maybe Toji tells us.
But also on the securitization stuff, is it who leads? Yeah, actually, I was about to say who goes first, but I think there are institutional investors, and I can speak as one who's willing to look at those sort of securitized derivatives.
But there's also quality. There's also quality of those assets.
Yeah, it's quality of assets, right?
Yeah.
So I like to think. I mean, and there are.
Oil and gas assets, don't they have good quality?
Yeah. So if a bank comes to me with some sort of collateral debt obligation or
asset-backed
security,
would you do 10 years?
Would I do 10 years? It depends on what the asset is.
I mean, if it's a securitized asset, does it really matter how many years? You don't have to hold the asset. You can always sell it.
I mean, I can speak.
It can be
I can speak on
securitized
behalf
that you
of.
can trade.
I mean, we're even trading on the NG Clearing, for example, launched the futures markets. We were the first institutional investors to actually buy an equity index future. So investors are willing to actually come in and take these derivatives.
So what you're saying is that the products do not exist, which is the thing that embarrasses me a lot of the times in the giant of Africa, when we do not have the robustness to be able to create the kind of products that will entice and excite everybody. But speaking to your thoughts about the pension industry, the pension industry is one that you've spoken about, incremental progress, and it's become a fantastic industry. And when it was set up, it was set up to ensure that contributors' money was saved. First priority was when you come 30 years from now.
So there's inbuilt risk aversion. Is what you're saying.
It was inbuilt from day one, and we all know why. Before then, in fact, at the time, there was some few years ago when one particular pension guy was, I don't think
Robert Maxwell.
No, there was one guy that was, charged by the
public sector.
Yeah, public sector
Maina,
something like that. Stole pensions, and it was publicized. So those kind of stories built risk aversion into the institution. And it's become that over time. And it's become fantastic with doing what risk-averse entities. Will
Yeah,
do.
see, I think
Now-
it's sad when bad.
No, it's not sad. It's
I'll finish.
Nigeria. It's where
Yeah.
we come from. We need to understand that you can't just jump from yesterday into tomorrow without passing today, right? So the people who got us from there. In fact, if somebody like Ugodre had led Pencom at the time it was created, it probably would have not gotten a lot of traction because it would have been giving a lot
Whatever,
of futuristic ideas and things like that.
Are
But
you
you
kidding?
needed somebody who was risk averse, who was telling people your money will be safe.
Where are we
So
today?
the
thing
phase
is,
is
for me,
phase.
It was a phase, right? So
20
now,
years already, 20 years down, and we still have pension funds buying government securities and giving you sub 5% yield.
We are now at the place where the channels are now being opened. However, there's something very critical. The leadership of the pension industry might have changed. The mechanism of the pension industry is still the same. So people who are executives in PFAs now were entry-level staff some 15 years ago.
I said thinking hasn't changed.
I'm saying thinking in a lot of those institutions have not changed.
No,
The
you-
risk aversion
so the thing is
remains.
So even though regulation has moved,
So yes,
the market hasn't moved to
leadership
catch-
mindset
okay.
has changed. Leadership mindset in
but the
the
market
regulator
hasn't
has
moved at all.
changed. But the industry itself
that's
has
actually an unusual situation
Yeah,
where,
because it's
where the
usually
regulator is moving ahead of the market.
It is
yeah.
actually very weird because the regulator is thinking. I mean, they're coming up with all kinds of thoughts to try and change it. But the players, the people who
That
actually
sounds like
do
what
the
we see in the
movement,
insurance sector as well.
the people who actually do the movement are still stuck in 20
Risk
years ago.
averse.
So in the pension industry, you hear this is how we've always done it, and you're like, why?
So
why have
for
you
me, the
always done it
solution
this
to
way?
those things is rather than, and it's the problem with human beings in general, is when something bad happens, we get risk averse, especially something bad in that sense.
Yeah.
But for me, the way I get around it is I put controls in. I don't get risk averse, I just put controls. And that's how I solve my risk averse.
They say Nigeria happens, and then, I mean...
So Nigeria happens, so when it happens, just put
No,
controls.
but you know the
Controls in
thing
place.
is
So
that-
I'm not risk averse.
so-
But when the next guy comes in, you
Let
can't
me
play around
tell you
because there are
something.
controls in place
Somebody
rather than
last week, this is not like 10 years ago. Last week, somebody still asked me, why is the government always borrowing all the pension money? And I'm like, why in 2025, y'all? As in, that's not what's happening. You know, the government issued bonds, pension funds bought bonds. As in, it's an investment. It's not government took money from the pension funds.
But it's the government you're lending to now.
But the
How you're
government
trying to
didn't
rationalize
come
this.
and say, give me, because
But it's government you're lending to, so it's government that has
no,
the money.
The narrative is government went and took the money from the pension
I mean,
fund.
it's you explaining it like that, of course.
Well, is
It's you
it-
explaining it like that.
No,
because government is the one that set the regulation.
Because guess what?
That sets the rules of where you invest pension funds in.
As of today,
And so what are you saying?
today, like
I don't
what
think,
you say,
I don't think
the
pension
regulations
funds
have
are
evolved.
allocating up to the quota available.
It's just the
in
easiest
alternative
place to allocate funds to.
investments.
Exactly. So
And-
why are they not doing that?
So I think
Like I said, the mechanism has not changed. The leadership and the direction.
But can I ask you a question,
Yeah.
right? Because again, I as I said, I don't necessarily believe that the entire market will get to promised land.
Yeah.
But are there any specific players in your industry who have moved ahead of others, who have taken advantage of
Name names.
alternative
Name names.
investments, right? Are there those? And just to your point, Dre, right, about securitization, you know, if you look in the more mature markets, right, there's also a question of pipeline, the pipeline of credit that you securitize. And the more usual suspects you find in those markets will be consumer loans, things like you think credit card, mortgage. Now, that pool is not something that's necessarily available here. Now, that's not
government
to
is
say
working on that.
Or the
though.
pool of
Yeah.
investors.
We're seeing that coming up.
Of debt, of assets.
the assets.
But it's not
Okay, okay,
necessarily
okay.
the case that that's the only thing you could securitize. But those tend to be the more usual.
Because I also want
sad
I want
to
people to
say-
stop
but
saying
those
those
are
investors
even-
aren't there. Because
sorry, I don't-
investors are.
But those are even the riskier things to securitize, isn't it? Credit card rather than securitizing. Isn't it riskier than securitizing, say, for
Infrastructure.
example, infrastructure deals or oil and gas
Infrastructure
purchases.
deals in a market that we haven't even seen.
What about oil and gas?
What about oil and gas purchases? Oil and gas.
I mean, oil and gas potentially, but when you say infrastructure, where's the infrastructure revenue?
Oil and gas deals, mergers and acquisitions. Why aren't we seeing that happening?
I mean, that's a question for the banks, right? I think
we got to move into buy sell. We got to go into buy sell.
The legal side and the paperwork.
In truth, right? In truth, I have to tell you this, right? We have done quite a few. Maybe I exaggerate, but we've done a few securitizations in Nigeria. We've structured dividend securitization. We've structured. You've seen
the phone call. Though.
You've seen if you look at
the kind of things we're looking for. Investors are
there are a number of securitization deals that have happened in this market. Even some of the fast food quick service restaurants, some of them have securitized their revenues in this market. Now, obviously, it's very small deals if you think about, but again, those are cases in which bonds have been created out of, those sorts of revenue lines. So, proof of concept, but
securitizing
they're different elements.
Yeah, so but securitizing credit hasn't happened.
So you've got to have someone. I mean, the law. We as lawyers are able to create those transactions, but we don't create transactions by ourselves.
Yeah,
we need
there's got to be
someone who's sponsoring it, and
so who are the typical sponsors here then?
Financial services. Geniuses can come and say, look,
I want genius CBN governor.
But at the end of the day, is the thing I keep trying to say is that a lot of the times it is safer to keep your job if you go with the vanilla in Nigeria's financial services. And that is the problem we continue to face across board. The reason why the channels have been open for pension funds to invest in alternative investments, and they've not still done it, is because if you keep in the vanilla, nobody touches your job. But if you keep earning your fees, but if you now become aggressive and then you lose, you could be on the chopping block. So I mean, those are the problems where we just stay in status quo instead of actually evolving in times with regulation, because regulation is actually saying you can do this, but we've not moved in that direction.
So all right, guys. Not yet, though. So regulation has to help. I'll give you an example, right? There's an entity that's launched a private credit fund, but it took them over a year for the regulator to actually give them the license to do this.
This regulator has given approval to do it.
So this is where we basically, I ask questions and
I have no money to buy or sell.
Yeah. I mean, it's not like it's just you can buy with your voice, really. So buy, sell, or hold essentially is buy means yes, you agree. Sell means no. Of course, you can also say hold, which is neutral, like you're neutral to this. So I typically start with the guy on my right here.
All right.
Yeah. We've talked about banks and recapitalization and forbearance and all this, and the CBN has said banks don't pay dividends until you clear forbearance. But I think there are certain quarters who believe the fugas, all of them, will pay dividends this year. So fugas will pay dividends this year. Buy, sell, or hold.
Buy. I say that because
That sounds like you.
It doesn't. I actually don't think they should, but I know
they will.
Yeah. Whether they should and I say legalese context, whether they should and whether they will are two different things. I know they will. I think there is so much tied to paying dividends. There's share price, there's ego, there's brand value, there's so many things. So they will find a way to pay. So I think they will pay. Buy.
I mean, of course, dividend includes interim dividend anyway. So
yeah, buy. I think they will.
Buy.
I think they will. Yeah, I think
Is this just vibes or?
I mean, they will. I mean, so a couple of guys have come out saying they will.
I mean, like,
They've literally come out. CBN said don't pay. They said we will. So so they'll pay. They'll pay.
I buy on this one. I mean, I think Tunji has said it all. Ego, brand value, and that is what the Nigerian capital market is, or the stock market is.
How about you?
I also buy
dividend,
and I don't think it's ego or brand value as Tunji. I disagree. I kind of think they'll buy because
they are solid.
One, not just that. So particularly the Fugas, they have their holdcos and they have subsidiaries that they will probably sweat to upstream dividend. But their banks, I doubt if their bank subsidiaries will pay dividend. I doubt. I really, really, really doubt it. And if it's interim dividend, I don't see them paying interim dividend because interim dividend is probably due very soon. But in terms of full year dividend, I kind of think maybe they will pay. It might not be as great as it was last year. Obviously not, right? Yeah, but
so your point being that all of these, but the banks are the lion's share of these.
Yeah, but there are some banks. For example, I think is it First Holdco? Most of the dividend it's been paltry, and it's been paltry because most of the dividend has basically been upstream from their subsidiary companies. And that's what you probably see, even from, I think, Access as well. So some of them do get dividends from their subsidiary. So most times when you see very huge profits declared and then dividend payout ratio less than 30%, 20%, it's probably dividend upstream from...
because the bank subsidiaries are not paying.
Dividend. Yeah, that's what I think. All right, so I want to go into one subject that, I don't want else to deal with, but I mean, I think it's been in the news all over and people have been dealing with it. So this Iran-Israel war, I know that your guy has come out to give an ultimatum for, Iran to give up. And a different permutation about how this works, how this ends. And straight up for me, Iran will survive June without giving up. By Tolaram, because what I mean survive June is the conventional gist out there is surrender, we own your skies. Ayatollah is going to say, okay, I give up, I surrender to whatever terms, Trump and Israel wants, or he's going to, fight on because he probably has the arsenal to stay long. And my next basically segues into that because there's a reason why I'm asking that question.
I think.
So do you think they survive this past beyond June?
No, I don't think so. Without
giving up.
Without giving up, no, I don't think so. And the reason is this: you can't win a war that the other person is. You can't surrender in a war that the other person is determined to win or to annihilate you. Because I do not generally believe that this war or this conflict is entirely based on the facts that are being put out there. Israel has done some very astronomical things on the Iranian side that they've not been able to do on the other side, which is Hamas and the rest. This conflict is one where they've put out so many things about Iran possibly having nuclear weapons or capacity to create nuclear weapons. So they are trying to incapacitate it and, painting this. This is not 2014 or 2004. This is 2025 where people have a lot of information. And I think Iran would do themselves a bit of good to have some conversations. Maybe not surrender, but guy.
You think the regime, maybe I should just trick this a little bit more. You think the regime will stay by Salaho? Buy for the regime staying beyond June? Because I don't like the way you answer that question.
Hold because for them to... No, sellish hold. Let me explain.
I mean,
let me explain. There's a simple reason.
No, as neutral.
Sellish hold. If they give in, they remain. If they don't, there is a concerted effort to bring down the entire government, and it will not stop. And I do not think Iran has the capabilities to be able to keep up the fight long term.
Arnold.
Sorry. Treasury bill auction results just came out. And I have a dog in that fight. I don't have a dog in this fight. So I don't have a dog in this fight. So it's just going to be a hold. So I don't really know. I think there's more than meets the eye with all this thing, with everything going on with I think with Netanyahu and everything. So I'm on hold.
So let me understand this. The question is, will Iran fall by the 30th of June?
Yeah.
If it doesn't surrender.
Surrender, exactly. Because when I mean Iran, the regime.
The government, not the country.
Yeah, the regime, yeah.
I think the regime survives June. I think it does. It's a risky bet. And it's obviously risky because, I mean, Netanyahu is bent on going all the way. There's no constraint, right? And obviously, Trump, despite all the pretenses, seems to be fully aligned.
Fully behind,
right? So it's going to be a tough one, but I find it difficult to think that the instinct of the regime, survival is always the instinct of any. I mean, survival is a human instinct, right? But there's also face and a number of other things. So I think they will survive at least June.
Yeah.
And there's also a real possibility that the pounding will not continue at this rate for the next 2 weeks.
I think I side with Chike as well about it. I think that they would survive. I think that a lot of Trump's rhetoric is basically, his typical grandstanding. If they wanted to strike Iran, I think they would have struck Iran since. I think that China will win at some point because they're watching.
So, that I do not think.
Hold on. Then I think it's also in the best interest, as much as people would say, Iran is probably not popular in the Arab world, but I think it's not in the best interest of the West to bring down that government. So I doubt it. But let's segue into the next buy, sell, or hold, which is very close, and that's the penultimate, which is oil prices. So we've seen oil prices hit $70+. I know Arnold made some good buck off that bet. Did you see it hitting $80 before the end of the month? Buy, sell, or hold? Oil prices
Not
hitting
the end
$80.
of the month, but I definitely I've pegged that sometime around August.
Why August? What's going on?
So there will be aftermaths of this whichever way it goes, whether they reconcile, whether they have, whichever way, there's going to be an aftermath of reduced production from their side. I feel that is going to fully materialize in the market sometime around late July into August. So yeah, my thoughts is not before the end of the month.
So you sell.
Where's the market at now? 78?
75.
75.
June is just 2 weeks.
So oil has done better than I expected it to do. So at some point, technically oil just became too cheap, right? When you looked at oil versus a lot of assets, it was just ridiculous. When Brent went below 60, 59, it was an obvious buy. Now it's 75, and I think it's rallied faster than.
It's rally has been quick. It's been really.
It's moved too quick.
So this 75.
So
is
for it to, so it jumped $8 because of this situation, right? So literally from last Thursday to today, it jumped $8, which is huge. So for it to go another $5, I don't see. It needs to be. For it to go another $5, the escalation has to be something massive has to happen.
Again, yeah.
And because I don't see anything more than this, unless China gets in, I don't know what it is. So I started to reduce. I think oil rallied too fast. So
I hold on this one. I think it could go either way. So I hold.
What's your reason?
The reason I hold, right, is even in the midst of what has happened, right, when it seemed as if to the market there was a possibility or there was an indication that perhaps Iran will agree a ceasefire, right, or
balk. Yeah.
Price came down a little bit, right? So it's really that the markets are watching. It's really whether, to your question about whether are they going to surrender or will this play out? I think that's just where the rub lies.
All right, last buy, sell, or hold. Still,
So where are you on that?
Yeah, so I don't think that oil prices will hit $80. I don't see that happening. I don't, because I still think the world is still very worried about oversupply issues, and to that extent, I think we're already in an overbought territory, overpriced territory. So I doubt that's going to happen.
And I think the world is not very sympathetic to the case of Iran.
I don't know, because I mean, it depends on what you're watching and what you're tracking. But last buy, sell, or hold.
But is it a sympathy issue or is it a?
So it's a very, and that's where this last buy, sell, or hold is, right? Because we're in a very funny world, right?
Yes,
my last buy, sell, or hold
funny.
is stems from some discussion I had today earlier on with someone, and there was this gloom and doom picture that was painted, right? And of a world that is a little bit confusing. And the point is, look, how can you be in a world where share prices are off the hinges, valuations at 100x multiples of earnings, world where crypto prices are off the hinges, gold prices are off the hinges, and then there's war everywhere, there's so much uncertainty. You had something as huge as a tariff, war happen, and yet, you saw share prices go up, and then within a week or two, they are back up again. And so it's as if we're in some kind of crazy world. And he's saying, look, this thing is going to blow up this year. And so my buy, sell, or hold, then I'm like, okay, we're going to have a global meltdown this year.
Nah.
Buy, sell, or hold.
Absolutely not. Absolutely not. I mean, I do. It's not even.
So you think this to the moon is going to continue forever?
No. Not to the moon. Not to the moon. But meltdown, absolutely not.
So bear in mind, one of the reasons the person gave was, look, the subprime mortgage crisis that nearly crashed the entire global economy. Subprime itself is just a very small part of the entire mortgage industry, and that was almost going to bring down the entire global economy.
No.
But now we're seeing asset bubbles everywhere.
No. So the subprime was a systemic issue that everybody was buying into. So it wasn't just Americans that bought into that subprime credit bubble. It was Japan. It was rest of Europe. It was even Africa.
So, though, but I mean,
now this case, right, is one of global political dynamics. And what we do not accept as human beings is that we're not as sensitive to pain as we think we are. The world is full of war, has been filled with wars over the last couple of decades, centuries, whatever. But one war comes, we move on. So the truth about it is that
no global economic meltdown.
Nobody, people who care about Gaza are living in Gaza. The people who care about Iran, Israel, live in those two countries. The rest of us are just watching on CNN and BBC.
But there are a lot of sympathetic people out there.
Like who?
On all sides. I don't buy, sell, or hold.
So man, I want to go into a big rant, but we don't have time. But if anyone has been my follower from the start of the show, and a follower of my monthly newsletters, I've always talked about the structural change that's happening. From last year when we started, I started talking about stagflation. I'm not sure if you guys remember, there's a stagflation fear. Everyone said it's impossible. And we're seeing it now play out. This is something that, for me, started in the everything bubble in the subprime. So that's another show. And I talked about this in a show that we had. I think you were missing it. This is an everything bubble. That's the subprime. That's actually, we're seeing it play out. And what started to really, really make me realize that this is really, really happening is 2022 when Russia-Ukraine started. And we saw the world saw the way the US sanctioned the Russian reserves. When the world saw how the US can sanction another country's central bank reserves, other central bankers thought, what is going on? And they started to buy gold. They started to buy gold at an extreme such an extreme. They doubled. They doubled the amount of central banks around the world, doubled the amount of gold that started buying, and that's when economically as well things started to shake for the dollar. We've seen the dollar lose 9 to 10% of its value this year, which is huge, but it's been very quiet. We're seeing US treasuries go up. We saw China started to. There's so much. Long story short, it's not that it's going to be a meltdown as it's going to happen, but I think we're actually going through the meltdown right now as we're speaking. We've seen central banks around the world have increased the gold reserve from 5% to 20% in 2 years, and I think 20% is not enough. 50% is not enough. We're going to see reserves go to 50 to 80%. We're going to see gold go to 50 to 80% of central bank reserves. We're seeing the de-dollarization coming. Like I said, the dollar's getting cheaper. So it's not that it's going to be a meltdown all of a sudden, but we're actually going through the meltdown as we speak.
But you know, everything you just said hasn't been a meltdown. It's just
what I'm saying.
Transfers.
It's a structural change.
That's
why I call it a structural change.
Are you hold on this? Or?
So I'm buying a structural change that's already in play. We're in the middle of a structural change.
So we're at the cusp, or we're at the start of a meltdown, basically. This is the beginning. So the meltdown won't be as it's just gonna drop.
The meltdown is happening right now. So it's not a pop, but it's a meltdown.
Exactly.
It's melting down.
The melted parts are going into other places.
So we're in a structural change.
Tunji is so bullish on crypto. I know he doesn't want to melt down. Chike.
Okay, so I start with a caveat, right? You know, none of this is my area, right? So I'm just.
Well, you can feel the change.
Yeah. So I'm just speaking. You know, lay person here, right? Just looking, and the thing about the rationality of the market that you were talking about with tariffs, blah blah blah, and yet we saw
rising prices.
You know, I think it's a confusion, right, that has, at a minimum, right, come out of the Trump, if you like, unpredictability, normalization of the crazy, right? So I think, in my view, you know, markets have just been destabilized in terms of what used to make sense doesn't make sense anymore, and vice versa, right? So based upon that, right, my sense is that maybe sometime after this year, I don't see that meltdown happening this year, essentially because there's just a lot of hesitancy in terms of 1 minute you think,
you know,
this is it, right? But we suddenly realize that, you know, the market sort of pulls back and things get normalized, right? So my sense is there will be that disaster that people like Jamie Dimon have spoken about. I don't necessarily believe that it is in 2025. So for me, I would say I will sell on this one. 2025. No, I don't see it happening.
And I said it to Otubadel. We're now listening to Jamie Dimon.
Guys, so for me,
there's so much I want to say.
So for me, it's a hold, but I kind of also tilt towards Chike and Arnold. Tunji's own is sell, 100% sell, and I tilt that because I think that we're obviously in a bubble. But what I can't really seem to wrap my head around is, or why I don't actually think it's going to burst anytime soon, is because I think we're in a completely different world where, and we probably don't know it. It could be generational change, it could be Gen Zs, it could be whatever, but I think we're in a world where there is a lot of emotional
disconnection
value. No, emotional, or there's a lot of value attached to intangible assets now than we've ever seen before, right? So I think we tend to see assets in the conventional way that we've seen it years ago, where asset needs to be tangible, something that you can see, gold, money. But I think the fact that people now value intangible things or things that are futuristic right? I think that's something we miss out. So for example, people somehow just buy the fact that Tesla is going to be some big thing 10, 15 years from now. And they hold on to that emotional idea so much and they value it so much. Even if Tesla's earnings is not growing at the same pace that, the multiples that are assigned to it.
Different.
That's the definition of a bubble, isn't it?
Isn't that how we've always been?
That's what I'm saying. It's a bubble. So my point is that in the conventional way that would define bubbles, it would have been a bubble. Another example is I don't know who mentioned that. Whether it was Otumba
There's another one.
It's Amazon. It's Amazon, for example. So you've had Amazon. you've had an Amazon that has never
made money.
Dividend
Never made
in
money.
the way that people understand dividend, but its valuation has always been at multiples.
Yeah.
That's if it even has earnings. And that's because people have somehow bought into the idea that a company that just continues to show tremendous exponential growth in its asset base without necessarily returning capital to investors over a protracted period is value. So I think that's the kind of world we're in. So for that reason, it's just difficult for bubbles to burst. We think that's going to burst.
Do you want the second?
Yeah, give me another example.
GameStop.
Exactly. That's emotional too. That's my
It
point.
was completely emotional for every single person that bought into it at first. Then it became this thing that started to rise people's capital.
And I think that's what's happening to crypto as well. That's
and
why
a lot of people's
don't
minds
understand
are
crypto
because they still connected to.
They still think crypto it has to be a tangible asset.
No, but
Because when you speak to people who don't understand crypto, they tell you things like, it doesn't earn anything. There's nothing coming. It's not an asset. I'm like,
tied to anything.
So I think that
assign value to that intangibility of crypto. I mean, that's our buy sell and run for today,
you have to
guys.
look at the free money.
We've been on. Arnold wants to go on and on and on. But this has been an exciting Drinks and Mics. I hope that you found it.
You guys have really choked me.
As excited as we did that. I'm happy that I got Arnold to really talk today. And of course, last buy sell and hold, of course, is Chike himself. Buy sell and hold, guys. Buy sell and hold. Bye. We need to bring him back. I don't know why it was crazy.
Just for the deals he has been part of. No, bye.
And I just named half of them.
Yo,
I didn't even go.
so
Look at the time.
my
This is our
own,
latest.
my own of all the deals in Nigeria, that UBA deal is still legend in my mind because I remember I was.
I mean, I wrote a book about that. Though.
Why?
You haven't seen our couple of stories. Yeah, it's there. I don't know why it's not here
So
today.
how come I don't have a free
I
money?
don't know why.
I don't know why it's not here today. But anyway,
But that was a legend deal.
This has been Drinks and Mics brought to you by Nairametrics. Of course, like, share, follow. It's been great having Chike Obianwu on set today, Deputy Managing Partner at Templars. Of course, you guys know Arnold. He's the Chief Investment Officer at Kodos Capital. Of course, Tunji Andrews, CEO of our bar. My name is Ugodre, and until we do this again next week. By the way, live show coming. We're working on that seriously. Otumba Dell had to come into Nigeria for this. So that live show is happening. And we have some big mega plans for the live show. Trust me, you've not seen anything like that before. Mega live show that we're working on. And so you're going to be part of it, of course. Not everybody, but I mean, for the people that are going to be part of it, look forward to it. And until we do this again next week, do have a profitable week ahead. Bye.